Hello and welcome to another update video about Constellation. Today we cover Constellation. It is a chart that has also sold off in a way that is now below the 88.7% Fibonacci retracement level. So what does that mean? It means be careful, be on the side of caution. It's because of just the simple fact that we have dropped below that level. It is time to be careful, and I don't see any reason to be long here at the moment. This is a strategic question, yeah, and I'm not telling you to buy or not to buy, but before we get into the targets here and the analysis, three things to know. The first thing is with many of these altcoins. I mean, there's altcoins that look really horrible, like altcoins that are in a lifetime downtrend that never had an all-time high basically, or since they were launched, they only dropped. These are the worst coins because you have no bottom really where you know that there is at least some support. And then we've got the coins that are just dropping below the 88.7% Fib level because that is just what many altcoins do in a bear market, especially if it's their first bear market. And Constellation is one of these. And, you know, from my point of view, you know, they are allowed to drop below that level in the first bear market. But the question is always which coins are going to make it, which coins are going to recover. There are thousands of coins that died, and all the coins that dropped below the 88.7% Fib level are at high risk of dying. It is what it is, you know. It is reality. You know, we can try to avoid that conversation, but it's what it is. So whenever you invest in a coin that is dropping in below this level, just be aware that the money could be gone. Yeah, it could be gone because we never know which coins are going to recover. It's a coin's first bear market, and let's be honest. In a new bull run, a lot of new coins are going to come up that will be super attractive to new investors. And the old coins might, well, not really be too interesting, you know. So we'll see. But the point here is that the third thing I want to mention here is that, of course, you know, you can choose to buy these, but it's a strategic approach. If you buy, let's say, 10 altcoins, you need to be aware that a lot of them could just die. But maybe the 3, 4, maybe 5 that are going to make it, they will certainly pay for the losses. So it's up to you, you know, to sort of put a portfolio maybe together, but just be aware there's high risk with any of these altcoins, especially if they drop below the 88.7% Fibonacci retracement level. So we start with a bullish count, then I'm going to tell you also a bearish interpretation. In the bullish count, which is the one that you see on the chart, my assumption is that we moved up in a wave 1 here and peaked in August 21 at 46 cents. That was the all-time high. So consequently, we dropped here below the 88.7% Fib level, and from the high, that makes currently nearly a 92% drop. Other coins dropped much more, so it's not too bad for an altcoin, but still, you know, it's not great to be below that level. So at the moment, we would argue, you know, this was in a wave 1, we coming down in a wave 2, and we now need to wait that this low will be in, the bear market low, and then we can start to recover here, ideally in a wave 3. What would that mean? A wave 3 would be taking us, or would take us to a new all-time high. Now we need to be careful with all of these altcoins. It could very well be that if a coin doesn't recover, you know, we will never see that target. This is the condition of this target now, is that we will recover in the next bull run and will make a new all-time high. There is currently no way of saying which coins are going to make it. That is why coins that are dropping like this, we need to wait for a signal to the upside and then take it level by level. And depending on how they develop, we can then at some point in the bull run make a call, oh yeah, this coin is going to look good. And again, all coins that drop below the 88.7% Fib level are certainly at higher risk of not making it. Okay, but target here to the upside would be at least the 1.618 Fibonacci extension that is at 78 cents. It could go all the way up to, in the 200% extension, 96 cents. Above that will be unrealistic, but in a really bullish environment, I've seen coins do more than that. Then we can come down in a wave 4 and move up in a wave 5, and then we could reach $1.25. Roughly, yeah. Could even be more, you know, in very bullish environments, but these are sort of roughly the targets that you would expect. Okay, so this is the bullish case. In the bullish case, we have moved down in, this is quite a complex corrective pattern, quite a bit of an ugly one, but, and the problem with patterns like these, it's not a clearly corrective pattern. This could also be a diagonal pattern, so it could basically be a 5-wave move down. We're going to take a look at that on the bearish on the bearish count. So, however, in the bullish count, I count this as a WXY pattern, and the Y wave consists of another ABC, where the B wave peaked here at around 26.5 cents. And since then, we have been moving down in this C wave. A C wave is a 5-wave move. I've got here, and I'm showing you the main counts. I've got here a 1-2 setup. Then we have, 1 second, no, that's wrong, 1 sec. I just need to, forgot to move that over here. So it's a 1-2 setup here with a 1 down, A, B, C. Then here the wave 3 to the downside, the wave 4 to the upside, and the wave 5 down. So that wave 4 high was at around 12.5 cents. We're now coming down in 5. We recently made a new low below 4.9 cents. The question is now, before we really get into the detail here, what would be a logical downside target? Now, before we go really into the hourly chart and so, let's take a look here on the 4-day chart at a target for the wave 5, because this wave 5 of C, of Y, of 2 would basically end the bear market, or at least we have a good chance to end the bear market there. So we're sort of towards the end of this downtrend, but don't forget, this could carry on for many more weeks. I mean, look at this movement here between, this was just sideways movement here very much in the beginning, yeah, until January 21. So this could just bottom out and just move sideways, sideways, sideways. Be aware of that. But one target, one way of calculating it, one that also fits here the proportions and everything, would be to take the length of the A wave and we go to the high of the B wave, and then we're looking at a target at the 1.618 extension. So I just need to make sure that I picked the high here. We're looking at the 1.618 extension. That would be the next target. And we're talking here about So we're talking here about 2 cents basically. 2.1 cent would be one target where we could expect at least a bounce and have a good chance that the low is in. That's basically the only target this ABC structure is giving us. So would that make sense? Well, from a Fibonacci extension point of view, yes. So here 2.1 cents is certainly something we need to keep an eye on. In terms of support, well, I would argue that that makes sense as well, just structural support, because let's take a look. First of all, we have here significant swing highs back in November 19, a bit of a wick here in February 20, and then we've got here at August 20 also support. So this could really be a target where we could find support and end the bear market and move up from there. If we drop below that level, we still have significant support in this range down there that would be outside of any Fibonacci extension targets. Well, there is one more way of, because there's another way of calculating a target, but this sort of, we have a first target and then we'll have a second target as well. So the other way of calculating, let me just double check that, would be, let me see what we get. We take the length of the wave 1, and we go to the high of the wave 4. Right, no, that would actually take us to 0. So forget about that, that doesn't make any sense to use that one. But yeah, we've got the 2.1 cent level and then here this support area. Based on historical volume, you can see this is the area where all the volume is, starting at 1.6 cents, going down all the way to, well, nearly 0, okay? So this will be the area where it will most likely, if it doesn't hold the 2.1 cent level, where it's gonna go into, yeah? Even now, at the moment, we are at a support level. This is basically here, this significant swing low, but the way the price is currently coming down, I would argue we're probably gonna break that. But let's understand there is some support here as well at around 3.7 cents. However, not a frequently traded area, probably not a lot of historical support, just a very, very strong support, strong swing low here, a very visible one. Okay, so now that we've established downside targets, and honestly, the lower it goes, the more difficult it will be for this coin to recover. So let me just find the VRVP. Let's hide that again, and obviously I don't even need to look at that, but it's just to have it all complete. I mean, you see here 2 moving averages. You see the 50, which is here the white line, and then the blue one is the 200-day moving average. They are even going further away from each other. That is not good, because often what you see in a move up is a so-called golden cross. Happened here the last time in February 21. After that we had a bull run, and the fact that we're not even getting closer together but moving away from each other, that the shorter time, the shorter time frame moving average is going to go down faster. That separates them again. It's not really good to expect a golden cross soon. Looking at the EMA ribbon, you can see here we had the last short signal around the 26th of August. Would have worked out nicely. We are below all these EMAs here on the daily chart. It just shows where the resistance is, right? Just it's pushing the prices down. So now that we've covered that, we can, okay, so now we can go and take a look here. I mean, we can, before we go into the lower level wave count as well, let's take a look at the indicators just to get an understanding. And here we are now oversold on the daily chart. I mean, the last few times we were oversold, we saw a little bit of a bounce, nothing major. And the last time we were so oversold, I mean, we were back in June, we saw quite a bit of a significant bounce. I think that should happen soon as well. Should see some kind of a reaction at least, but even if it's just something, let's call it a bit of a relief rally, yeah. Until we don't see 5 waves up, we can't really expect a strong move to the upside to follow. Also considering Bitcoin, that is still probably going to make another low. What can we expect here for Constellation? The fact that yes, we are oversold, but the MACD is still increasing negative momentum. So that's certainly nothing that would tell us that we can expect here a significant upside. Momentum is down. We are on the bearish side on the RSI. Yes, oversold, so you expect some kind of a move up. But typically when that happens in a downtrend, it's quite weak. Maybe pushes us to the 50 level here of the RSI. What is interesting is on the daily RSI, you can draw a trend line. So trend lines can also be drawn on the RSI. And a breakout here would possibly give us some upside, yeah. So trend lines on the RSI can be useful. Maybe just something to observe. But overall, clearly, you don't need indicators to understand this trend is down. It's probably not gonna reverse very soon to get back into a bull run or anything, because there is just no impulse here to the upside at all. But we've established downside targets, and if we understand that wave 4 was made up here, then we can now understand this move down as a 5-wave move in wave 5. So let's just draw the fibs. So there is one interpretation where we would look at this as a wave 1, a wave 2, and we could still be in the 3rd wave, to be honest, then a wave 4 up and a wave 5 down. This is the 4th wave to the upside, where I'm saying we could maybe see a little bit of a relief rally, but this would fit very well here, the 2.1 cent target, or maybe even a bit lower. So wave 1 here, yeah, and we can count these. One second. Yeah, we can count the subwaves as ABC, because it could be an ending diagonal. And in an ending diagonal, if you can count the subwaves as ABC patterns, or at least the first one, and you can do that for all of them, you can interpret an ending diagonal like that, and it fits quite well, especially the movements that we had here. But again, there's different interpretations, and it doesn't really make a great difference here. So we can see that this was possibly an A wave, then we had a B wave triangle, C down, and here as well coming down in an A wave, B, C down, and then we would get a wave 4 relief and a 5 down as well. Other interpretation is obviously 5-wave moves for wave 1 as well, possible. And then we had here 1, 2. Here we had the wave 3, and that would most likely have been here. Then the 4 and the 5, and I probably have to go to the lower level wave count. So like that. Then we had an ABC in the wave 2, and then here as well. Then you would most likely have to say we had here a leading diagonal in a wave 1, 2. Then here we are probably still in the 3, and there should be a 4 and a 5. This is really the micro count. Diagonal patterns are tricky, yeah. We can probably even draw something like a trend line here, and you get something like a descending wedge, typical for such an ending diagonal. And this would push us probably, if we get the breakout here to the upside of this wedge pattern, it could take us higher in the wave 4, yeah. And then we come down in 5, and what that would that could possibly lead us to maybe a larger descending wedge or so. But the point here is that until we don't, unless we see 5 waves up, an impulse to the upside, which would be something like this, and it can be on a smaller time frame, doesn't need to be that big, until we see that and an ABC structure down, we won't have any evidence that this is bottomed. Yeah, the wave 4 here would most likely be corrective as well, and then come down further. So, but this is the bullish interpretation. Even in the bullish one, I think we are still looking for lower lows, unless we impulsively rally higher. But to believe that, I would really need, to be honest, I would need a rally above 8.9 cents. 8.9 cents to take out this wave too high. Everything until then is probably, unless it's clearly in 5 waves, would probably make the impression of something corrective. Now, what would be the bearish possibility? So, the bearish possibility, I'm going to quickly switch to log chart, because you can see it here better. The bearish case, in the bearish case, we had here a wave A up, and that is possible to count it like that because of the ugly 3-wave structure. Then a B wave down, and we consider this a 5-wave move up, however in a C wave. So in that scenario, and I'm going to show you here just highlighted with a highlighter really, what you'll see then is something like this. That's the bearish count. Yeah, and that would most likely take us whatever close to 0. And then we might have a chance to recover from there, but it will get unlikely. Oh, what's going on here? Wave 1, wave 2. Down in 3, recovery in 4, move down in 5. Again, probably not finished yet. That's basically very similar to what I showed here in the WXY pattern, yeah? So we are basically aligned here. But the bearish count would say that, okay, we might have a similar target down there first, yeah? And then we go into a long-term bearish count. So that this 5-wave move, yes, we can see a recovery when other cryptos get into a bull run as well. But it would only be something like this, ABC. What happens then? Then we're going to come down that this was only a wave 1. This is a wave 2, yeah, and we're coming down further. 1, 2, 3, 4, 5. Maybe the next bear market. Then we see a wave 4, A, B, C. Then we come down 1, 2, 3, 4, 5. And that's a long-term bearish count. And if something like this happens, this is how these coins usually die. They don't die straight away. They might recover in the next bull run, might not make a new all-time high. Yeah, might get into the region. Maybe here 61.8 fib level, 15.5 cents. Yeah, maybe 24.5, something like that, and will then die. The reason I show that to you here on this chart, a log chart, is you'll see it better and then you understand what's going on in the linear chart. Can you see that? That's how these coins die. That's exactly what XRP is doing at the moment. Now, I'm not telling you XRP is dying, but it is quite suspicious that XRP has made in the last bull run not an all-time high. And that's how it starts, and it just fades and fades. But this could take years. Yeah. But that's the bearish interpretation. And that is always on the table if a coin drops so much below the 88.7% fib level. Again, many coins do that. ADA did that in the first bear market. ADA has done it again. You know, it doesn't mean they have to die, but it's certainly a reason for concern. Okay, and that's my update about DAG Constellation. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And thanks a lot and see you in the next video. Bye-bye.